feedback for Q3 2023, the Northstar BCI managed fund. Really tough quarter for risk assets globally. Both bonds and equities down more than 3% in dollar terms this last quarter. Currencies were also very weak against the dollar, very strong dollar. The sterling was down about 4% and the euro down more than 3% this quarter. And that's really applicable to most currencies. One or two did relatively well against the dollar, but the majority were weak. The rand, strange enough, had a relatively flat quarter, but it's the third worst performing currency year to date against the dollar, down about 10%. CAPSWIX was down 3.8% this last quarter, and year to date slightly down 0.3%. Unfortunately, South Africa is the second worst performing emerging market year to date. So against that background, how did the fund do? It was down, unfortunately, 0.55% for the quarter, but it outperformed peers that were down almost 1.5%, and its benchmark, its proxy benchmark, was down almost 3%, 2.8%. All three areas of the fund outperformed their respective benchmarks. The South African equity portfolio, run by a South African equity team, returned minus 1.9% against the CAPSWIX, which I mentioned earlier, is down 3.8%. The global portfolio outperformed the MSCI All Country World, which was down 3.63%, and we're down 2.83%. And the fixed income component of the portfolio beat the All-B. So the three areas we could control did well, and definitely large outperformance against the peer group. Just looking forward, we've reached a fulcrum in markets and economic activity. As bond yields have risen, it's put extreme pressure on the entire economic system, and we're starting to see a slowdown taking place. This adds risk to the financial sector, to the markets, and we defensively positioned in the portfolio to account for this.